we're seeing now. But what happens when rates rise? I take it you said that rates should go up at least a little bit, right?
Well, I'm saying definitely the Fed should be raising rates now, absolutely, to stop this proliferation of high-yield debt. And you're right. They painted themselves in a corner. 5 years, 6 years, they have not raised rates. No, we never did anything close to it. You know what it is? It's like taking some kind of drug that maybe works for a little while, and now you just say, keep taking it, and let's see what happens.
Well, do you agree with the camp that says there really is no reason to raise rates because the global economy is so weak and we're not firing on all cylinders here, so there isn't a reason?
Well, I'm giving you a reason, Neil. The reason to raise rates is that you're building bubbles as we speak.
So they're creating a bubble, and we're going to regret it because they don't do something about it, it's going to burst.
Absolutely. They created it. Hey, look, the rates when they went down, to fight the 2000 debacle, the rates went down, and that sowed the seeds of the housing bubble. Okay, now that's not the only reason you had a housing bubble, but that sowed the seeds of it. So then what happens is, so after the whole damn thing fell apart, they did start lower the rates, but it was too late. And you had the housing bubble. And it may be too late now, frankly.
So there's another housing bubble now?
I think there is, but you haven't seen it yet. It's going to really, I really say there that there's a great risk it could be disastrous. You have $2.2 trillion. The subprime debt was only $1 trillion, and look what it did. This time you got $2.2 trillion. It's ridiculous. People buying things they don't understand. And how about emerging market debt? So the IMF says, hey, don't raise rates because you're going to kill the emerging market debt, structure. And you say, well, we're not supposed to be the banker of last resort for the whole world. But that's not even the issue. The issue is you got a real problem at home, and I don't think anybody's facing it. Janet Yellen goes, yes, I may do it. I don't do it last night. She's going to do it now. And maybe it's too late, and that maybe. And look, a lot of people tell you don't raise rates because it'll be disastrous for our economy because we painted ourselves in a corner. But, hey, I still think that, look, I think we're dysfunctional in government and we're dysfunctional in corporate America. You have no accountability in corporate America. And I think, hey, I hope I'm wrong. Believe me, I'm better off financially if I am wrong. But I will tell you that we're building, in my mind, a bubble. And I saw it, by the way, not that I'm looking to pat myself on the back, but I'm saying it so, at least you know that I've been pretty successful over the years picking this stuff out. In 2007, I saw it happening. And I did what I'm doing now. I'm shorting the high-yield market somewhat. But I will tell you, I'm better off if I'm wrong. I'm better off if it doesn't happen. And maybe we'll avert it. It's like you see the tsunami coming or a tornado coming, and maybe it'll turn.
Well, you said you're shorting the high-yield market. Is there anything you're buying outright in this environment?
Yeah. I mean, there are things. I'm not on the phone, though, to talk about it. Well, look, I've always told you that I love Apple. I think Apple is very undervalued. I mean, if you look at it, a company. But I'm not here to push Apple. But I think Apple is going at 9 times earnings. The S&P, I think they're overstating earnings and going at close to 20 times earnings. They don't amortize this intangible. They're buying companies that get intangible assets that should be depreciated over 2-3 years. They don't depreciate them at all. They give you guidance and oh, great. And you look at some of these pharma companies. What happens when their patents go up? To make it easy, they buy a company with a lot of patents. Hey, don't worry about those patents. But they're going off patent in 3 years or 4 years. Oh, it's okay. We'll buy another one. I mean, the whole thing is...
No, I see what you're saying. But you do have the financial knowledge that very few in Washington, if any, have. And it always comes up because I know it was raised again when your friend Donald Trump had mentioned the fact you make an ideal Treasury Secretary. You dismissed it out of hand. Why?
Well, hey, I do what I do well. I know what I do well. I'm 80, close to 80. I'm not going to be running down and be Secretary of Treasury. But I would advise them, and they should get guys like me, if not me. Guys like me advising them instead of the groups they have. They're not bad people. Don't get me wrong. But they should get people that have lived this thing, have been involved in it. And they get these guys out of school, and they all advise them. You talk to these politicians. You listen to those guys at the debate. They got no goddamn idea, some of them. Hey, so Donald Trump says to him, we should get rid of carried interest, which is absolutely right. These guys, hey, you get a hedge fund operator. He's making a fortune to begin with, and he's getting away with paying long-term gain. So Donald says, that's we should show the world that's not right. And then you got guys up there saying, well, you gotta reward people for incentives. That's true. That's very true. But this is an issue everybody talks about. And yet you got candidates saying, hey, we have to reward you for incentives. That's true. So if somebody buys a stock, they get rewarded long-term gain, right?
Right.
Neil? But this is no incentive. The hedge fund guy is sitting there. He's not putting his money in. He's not taking any risk. He's got the greatest deal in the world. You know, if the market goes up, hey, he wins.
So it sounds to me like Trump is your candidate.
Oh, he is. I think he's the best by far of any of these guys.
Okay.
He definitely is. I mean, hey, somebody could come along, there's genius coming along in business maybe, you know, or maybe, you know, hey, I disagree with Trump on certain issues and I'm going to talk to him about it. But right now he's definitely my candidate.
Wow.
There's nobody close. Hey, you hear one guy says, oh, carried interest in socialism. They have no idea what the hell's going on in business or in the world, you know. And all these guys that you listen to, I mean, the closest guy, but I don't think, you know, he can do it because I don't think he'll stand up to this Congress and Senate. The closest guy that understands something is Jeb Bush, but I don't think he can do it. You know, I don't think he's brazen enough to go take these guys on. And you got to really take on establishment. You got to take on Congress. You got to take on business, and you got to change laws of business. And it's hard to do. I mean, so Trump is willing to say, screw you if he has.
I don't know if Donald Trump put it in that language here, but obviously one of the richest people on the planet, worth $20 billion and then some, saying that Donald Trump is his guy. And when it comes to trying to get that money that's held abroad back over here, you almost think that he wrote the script that would get that money back over here. Key part of Donald Trump's plan is to give a one-time tax of 10%, only 10%, to bring home $2 trillion. It's a key component in the Trump tax plan that sounds a lot like what Carl Icahn just said.